Hello everyone and welcome to another Midweek Technical Outlook here at xm.com. Peace deal hopes are lifting risk assets with the US100 hitting a fresh record high. Gold is also extending gains, while a softer dollar pushes dollar-yen below 159. Now let's dive in. Let's start with the US100 index, which is currently extending a 12-session impressive rally to notch a fresh record high near the 26,324 level for the first time since late January, when it notched a record high of 26,218. Now, should it resume to the upside, the first resistance in uncharted territory lies near the 26,500 level, followed by the 27,000 psychological mark, which is also the 123.6% Fibonacci extension of this pullback from the January 28th high to the March 31st low. Now, to the downside, immediate support lies near the 25,915 level, which is the range ceiling of this multi-month consolidation, which has held from late November to early February, followed by the 25,400 level, also strong resistance, which has been capping gains since February 4th, and further below the 24,900 level. Now, the key support area to watch it is near the 24,500, where a cluster of the SMAs lies, the 200 and the 50-day SMA, as well as the long-term ascending trend line. So a break below this area could then accelerate losses towards the 24,000 level. Now, the momentum signals reflect the bullish bias, with the RSI sloping upward toward the overbought territory, and the MACD overextended to the upside, turning positive above the red signal line. Now let's also have a look at gold. Gold is currently attempting to rebound off this medium-term ascending trend line drawn from October lows, holding near the 4,800 level. However, it's meeting strong resistance near the 4,850 level for over a month now, so should it manage to break above this key level, then the next key hurdle to watch is the 50-day SMA near the 4,900 level. A break above the 50-day SMA could then revive upside towards the key 5,000 psychological mark. Now, to the downside, the 100-day SMA near the 4,700 level remains a key support level, followed by the 20-day SMA near 4,600, and then further below the 4,550. Now, of note, there is a bearish crossover between the 20 and 100-day SMA, exerting pressure for gold, and this bearish bias is also supported by the momentum signals, as the MACD is still in negative territory, albeit above the red signal line, and the RSI is still struggling to at the 50 neutral threshold, reflecting this consolidation. The broader bullish bias, though, still holds as price action is well above the 200-day SMA and the 20-day SMA, as well as this medium-term ascending trend line. But consolidation for now is likely to resume as reflected by this muted price action. Now, let's also have a look at dollar-yen. Dollar-yen is extending this consolidation, which has been holding since early March. Now, it's also trading below the key 20-day SMA near the 159 level. Should it resume to the downside, then immediate support might come from this range floor near the 158.20 level, followed by the 157.50 level near the 50-day SMA, and further below the 100-day SMA near the 156.95 level. Now, to the upside, a break back above the 20-day SMA might then target the range ceiling near the 159.70 level before it reclaims the 160.45 level, which is a 20-month high and a key intervention zone that has triggered this pullback. Now, the momentum signals reflect this consolidation neutral phase, with the RSI flatlining at the 50 neutral threshold, and the MACD losing momentum below the red signal line but still holding in positive territory. That said, the broader bullish bias for dollar-yen holds, with price action well above all key plotted SMAs and the long-term ascending trend line. The only hurdle is is reclaiming the 20-day SMA to revive further upside and bullish bets. Now that's all for today's market wrap. Thank you for watching.